Hello, I'm going to talk about cash flow statement chapter last for this class. Cash flow statement has become important for the last 70 or 80 years. It is a required statement along with income statement, retained earning, balance sheet. So cash flow statement is a very important thing now. It shows your liquid position over the year. Cash flow, if you look into the PowerPoint slide, it will give you a list of 5, 6 items which highlight the purpose of the statement of cash flows. It shows what explains the change in the cash balance, from where do you get the cash, where do you spend the cash, how do you pay the dividend, etc., etc. Now, the important thing is how do we get cash and where do we spend cash? There are 3 major sources of getting cash. One is from operations, that is buying and selling of merchandise and paying for expenses, etc., etc. Number 2, from investing activities. If you sell an asset, you will get cash. If you buy an asset, you will spend cash. And third one is financing activities. How do you finance your business and operation? That is, you issue bonds, you get cash. You redeem your bonds, you pay cash. You issue shares, you get cash. So these are the main 3 sections. So when we prepare a cash flow statement, we try to highlight how much cash did we get from operations. Number 2, how much cash did we get from investing activities? How much cash did we get from financing activity? Now, cash flow can be an inflow, can be an outflow. When we do something and we get cash, we call it cash inflow. When we do something which causes cash to go out, we call it cash outflow. For example, when we make sales and we get cash, that is cash inflow. When we buy things and we pay cash, that is cash outflow. The operating section, the first section, there are 2 methods of preparing that section, direct method and indirect method. I will a little bit talk about both the things, but mainly we will do indirect method. Okay. Now, whenever a question is given to you like a problem, 2, 3 things must be given. Your income statement, how much income did you make, and the balance sheet, beginning balance sheet and the ending balance sheet, to show how much assets and liabilities and other non-cash assets have gone up or gone down. This will help us to prepare cash flow statement. Separately, I will give you one example. We need to see how much cash we have paid for salaries. From the income statement, you will know how much your salary expense. Income statement does not show us how much cash we have paid. For that, you will have to have 3 other bits of information known to you. How much was liability on account of salary? Let us say in the beginning of the year, you were to pay $500 salary due. In the cash statement, in the income statement is given $4,000. That means everything okay. You should first clear your liability of $500, then you should pay $4,000. But at the end, if they say your liability is $1,000, that means during the year, you must have paid $3,500 cash for salary. Same type of thing, we can say how much cash did we receive from the dividend. So for that, we will say in the beginning, how much dividend was receivable. Suppose dividend receivable was $1,000. How much dividend income is there in the income statement? That means this is what we earned. It doesn't mean that we have received that cash. Suppose dividend earned is $5,000, right? Now, at the end, how much is still dividend receivable? Let us say $2,000. That means how much dividend we must have received. 1,000 was in the beginning receivable, 5,000 we earned. That means $6,000 we should receive if everything is okay, but we still have to receive 2,000. That means during the period we must have received dividend $4,000 cash. So that is like cash coming into you. Now, same way we can also find out if some item is missing, that how much cash we have paid to the suppliers. How much were the creditors in the beginning? Let us say our creditors were $5,000 in the beginning. How much did we buy? Let us say we purchased $20,000. So $5,000 were the creditors, 20,000 we bought. That means we should pay this period 25,000. But we don't know how much we have paid. So if we know what is the amount of the creditors at the end, let us say there is still $6,000, that we must have paid $19,000. 5,000 in the beginning, 20,000 we purchased, 6,000 is still payable. That means 19,000 we must have received. Now, in simple steps, how do we prepare cash flow statement? And I will advise that if you can remember or memorize this thing, it will save your time and facilitate the thing. Whenever we have to do indirect method for operating section, only for operating, not for investment, not for financing thing, we start with the net income. We assume net income is always in cash. So first write net income. Then we know from our earlier understanding of chapter 8 that depreciation is considered expense, but we don't pay cash for it. So we try to add back depreciation in the net income. Then there are important four items of current liabilities and current assets. If your current asset have gone up, that means you got receivables, you did not get cash. So if there is an increase in current assets in relation to beginning at the end, if in the beginning your current asset was 2,000 and now at the end it's 5,000, that means 3,000 is increased. That means $3,000 you should have received, but you have not received. So increase in current asset should be subtracted. Like this, if there's a decrease in current assets between beginning and ending, you should add it back. And liabilities are opposite of it. So you should try, if there is increase in liability, add back increase in liability, and if there is a decrease in the liability, we should subtract it. So let me repeat again. We start with the net income. We add back depreciation or amortization or depletion, whatever. And then if there is increase in current asset, we will minus it. If there is decrease in current asset, we will add it. If there is increase in current liability, we will add it. If there's a decrease in current liability, we will minus it. And the last thing is, if there is a gain on the sale of asset or loss on this sale of asset, to avoid double counting, if there is a gain, we subtract this gain from the net income to avoid that thing. Now, as I told you that we will ask only the indirect method. But the other two sections, investing activities, if you have sold some assets, you will show the inflow of cash. If you have bought some assets, you will show outflow of cash. So the net result of this section either will be outflow maybe more or inflow maybe more, and you can write that amount. Like this, the financing activities. Did you issue any bonds? If you issue the bond, the cash must have come in. If you have issued some shares, you must have received cash. So that is inflow of cash. So you can write the net thing there. So you add what is the net result of your cash flow, outflow or inflow from the operating activities, from the investing activities, and from the financing activities. That is the net outflow or inflow of cash during the year. Now, if you put the beginning cash flow, the beginning cash balance in this and add whatever is the net cash flow or outflow, and at the end, this should give you what is the answer of your ending cash balance. This cash flow statement preparation is important because this shows your overall cash position, and this also indicates how may the business look like in future, so you can maneuver or manipulate or plan your cash requirements. There are some items specifically which you should put where. For that, I will suggest that you try to read your PowerPoint slide or the chapter. That will be pretty helpful. Thank you very much. This summarizes your cash flow statement. If there is a problem, and hopefully will become operational in terms of email, do try to send me. Whenever I see your email, I will do my best to reply to your email.